morning, happy afternoon, happy evening to all my Nanbas and Nanbis. You guys kept asking me about the expected questions marathon, but I'm going to give you something even better. All the standards revision in just a matter of 2 hours, guys. I've also given the standards here. What are the standards that we are revising in just 120 minutes, and extra government audit, bank audit, and automated environment also we are going to revise. Now, how you can use this resource? There are 2 ways. You can just revise a standard in your own material. Come here and just keep doing a tick mark activity. Just see if all the concepts are covered and keep marching forward. Or you can go through all the standards with me in this 2 hours. Just get done with this video and focus on your 1.5 days with question practice. You can do the workout in this 1.5 days because you will already revised all the standards in just a span of 2 hours. It is completely up to you how you want to use this resource. Yes, not wasting much of your time. We just have few more hours to go for your exam. So yes, diving into essays.
See, usually I told, right, in my class, in my regular class, I make the students write the summary notes. That is, after every standard, they with their hands and their pen fast, they will write the summary notes. Summary notes basically means every standard is written in a single page, and especially the day before exams, this one will definitely come in handy. I believe everybody must compulsorily write this, but because of lack of time for discussion in the classroom, I have written this for you all. So let's quickly revise essay 200 and 210 in just the next few minutes. All right, so we started off today with what is audit. Audit is an everybody independent examination of what? Financial information, whether irrespective of its, when such an examination is conducted with a view to expressing thereon. The whole thing is just with the definition. Then we went to responsibility of management. What is it? Preparation and presentation of the financial statements. What is the responsibility of the auditor? To give the opinion on the financial statements. Essay 200, name of the standard. Overall objectives of an independent auditor and the conduct of the audit in accordance with standards on auditing. Then we went to objectives. There were two pointers. The first one is to obtain reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error. Wait here. I told you material misstatement means, for now you keep it as important mistake, and material misstatement can be due to fraud or error. What is the difference between fraud and error? The intention is the difference between the fraud and error, which enables the auditor to express what? Opinion, to make sure the financial statements are prepared in all material aspects with accordance with AFRF, applicable financial reporting framework. Does this end here, or one more point is there? He will not be keeping it with himself. He will be reporting and communicating as per what? AS or SA? He will be communicating as per the standards on auditing. Now, what is AFRF? It is a framework adopted in the preparation and presentation of financial statements as per the law and regulation, usually whether it is AS, Ind AS, US GAAP, all of these are different AFRF which can be adopted by the management for the preparation and presentation of financial statements. Scope of audit, we saw what and all. It includes what and all. It excludes. Includes 4 points, exclude 4 points. Come on. Coverage of all the aspects. Reliability and sufficiency of what? Financial information. Proper disclosure of financial information. And lastly, we saw expression of the opinion. What does it exclude? Preparation of presentation, we saw it is the responsibility of the management. Next, duties which are outside the competence, and authentication of the document, and if there is any investigation, because that is 100% assurance, they will be diving deep, so it is not under the scope of audit. Then we went to what is benefits of audit and limitations of audit. What are the benefits? High quality information, and it gives the confidence to users. Then we saw all the stakeholders. Yes, shareholders are not involved. Employees can find the fraud. Government authorities will know. Lenders will know. Bankers will know. Controls, internal controls, whether it is operating properly. If there are positives, there will always be Limitations also. Now limitations is nature of financial reporting. Financial reporting is what I told you, it is just accounts. So accounts has lot of estimates, lot of judgments, and this is prepared by the management. So it is a limitation. Nature of audit procedures. Nature of audit procedures, just because you go and ask the information, are they going to give you? No, they will ask you to get out of the office. So that is the nature of audit procedures. Not in the nature of investigation. Audit is not investigation. We are not going to dive deep. Future events and timeliness of financial reporting. Next, requirements of audit, whether it is mandatory under law or whether it is voluntary. Yes, it is mandatory for companies which are governed under Companies Act 2013, for banking companies which are under the Banking Regulation Act 1949 or any other statutory body we saw. For voluntary, if they are a proprietary or partnership or HUF, LLP, etc. If internal rules require audit or sanction of grant or loan. Next, appointment of auditor for a company, shareholders, for government company, C&AG, and for firm partners. Government company means not less than 51% has been held by of the paid up share capital, very good, has been held by central government or state government or combinedly by both. Why do we require standards on auditing? To improve the quality of the financial reporting. Globally, we have to accept that this only is biryani. So there is a global benchmark practices. That is why we require standards on auditing. It promotes uniformity and all of those things. What are the qualities of auditor? We did not see all of this, correct? Extra points here, which is not even there in the book. Duties of auditor, qualities of auditor. What are the duties of the auditor? He has to follow the standards on auditing. If any specific procedure is ineffective, then alternate procedures has to be done, and whatever procedure that he is doing, he has to document it. If there is any departure, that also he has to document. Then if he wants to draw attention specifically to the users of the financial statements, he has to report on that. And just because he has reported everything and given the disclosure does not mean that he has complied with all the standards, does not absolve from complying with all the standards. Then quality, integrity, trust, he should first behave like a human, mad madri behave panakudadu, human qualities, critical review, all of these things, shine of culture, everything is there. Next, what is engagement? Arrangement to do something. It is a formal agreement between the auditor and the client, and it takes the shape of engagement letter. What is assurance engagement? We saw instead of auditor they use the term practitioner, which is a wider concept. Practitioner, because practitioner can be auditor. Practitioner expresses a conclusion which is designed to enhance the degree of confidence to the intended users, which is nothing but the stakeholders, about the outcome of evaluation or measurement of subject matter against the criteria. Types of assurance engagement: reasonable assurance engagement and limited assurance engagement. Which one is high level, low level? All of this chart, you remember? AASB. ICA was giving assurance engagement, agreed upon service. Agreed upon service means on a specific item it can be. That means only on revenue, only on other income, only related party transactions. You please audit this and give me this. Is agreed upon service. On assurance engagement can be based on past or on future also. Past is historical financial statements, and under the past we have three types. One is absolute and reasonable and limited or moderate review. Absolute is nothing but 100%. Reasonable is nothing but less than 100%. Absolute is called as investigation. Reasonable is called as audit. Audit has essays. Yes. Limited or moderate level is review. Here example also is given: full feast, biryani and upma, which we discussed in class. Prospective or projected financial statements, SAE 3400. What example did we see here? Prospect. Ola going to the investor has to give the financial statements for the next 5 years, which is prospective or projected financial statements. This chart we finished. Then we went to SA 210, agreeing the terms of the audit engagement. Then what are the objectives? Accept or continue, not reject. Here specifically they have given continue. What is who? For whom they have given accept, for whom they have given continue? Accept is for new clients and continue is for existing clients. So accept or continue only when there are preconditions. What are the preconditions? That there has to be a common understanding that the financial statements are as per AFRF, and All the internal controls ensure that the financial statements are free from material misstatement, and the management has to provide the auditor for 3 items. What is it? All the access to all the information, access to all the additional information, and unrestricted access to persons, all 3. Now EL, engagement letter. Why, how, what? Why do we require an engagement letter? It is important for both the parties, that is auditor and the client, to be clear about the nature of the engagement. There should not be any misunderstanding later on. How should it be? It always has to be in writing. It cannot be an oral agreement. What is it? To specify the scope of work. EL includes what and all? Objective and scope of audit, responsibility of auditor, responsibility of management, that the financial statements are as per the AFRF, and the form and content, that how the audit report has to be, that also will be there in the EL. If law or regulation prescribes the terms in detail, then should the auditor record in written agreement? If the auditor is satisfied that the management has understood everything, then not required to have a separate engagement letter. 4 cases we saw. The first case is preconditions or terms. If the preconditions are there, what are you going to do? You will accept or continue. If it is not there, what will you check? Immediately will you reject? No, you will first check whether it is required by law to accept. If it is required by law to accept, you will accept or continue. If it is not required by law, then you will reject. Case number 2, limitation of scope. Before itself, prior to acceptance of engagement, you know that your scope is going to be limited. At that case, what will you do? You will be giving something called as disclaimer of opinion. Now you all tell me, you know that they are not going to give you any information. There is no sufficient appropriate audit evidence. Here there is an assumption that it is going to be pervasive, so they have given it as disclaimer of opinion. In that case, what should the auditor do? He will not accept. Case number 3, if there is any change in terms, immediate divorce or something else, you will do. You will check for reasonable justification. If reasonable justification is there, you will accept or continue. If the reasonable justification is not there, then only you will not accept or continue. Case 4 is he is not accepting for changing the terms. He is not accepting for continuing also. Then what will you do? You will withdraw from the engagement. Does your responsibility stop there? You have to see if there is any obligation, either contractual or otherwise, to be reported to the regulators, owners, TCWG, all of those things you will have to check. What is the meaning of recurring audit? Audit which has been performing over the years. When will you revise the terms? How many points were there? 8 points. The first one, misunderstands. The management misunderstands the objective, management misunderstands the scope, or there is actually a revision in the terms, or there is a change in ownership, change in senior management, change in nature or size of business. Can you understand what I have written here? Change delta. And then there is a legal or regulatory change, or there is a change in financial reporting framework or any other reporting regulatory framework. Then you will go for new engagement letter, or you will remain them as to the terms which is there in the engagement letter with respect to recurring audit. Is it easy? Very easy to revise like this, correct? Before the exam, trust me, this will be super easy for you all. Write it for every standard in your own hand, your own pen. I want you all to do it. All.
Let's quickly revise Essay 500 which we saw yesterday. Yes? The war notes which I have written in my own hands is available for you. So Essay 500 audit evidence means what? The information which is used by the auditor in arriving at the conclusion. First of all, audit evidence means what? What is the meaning of evidence? It just means proof. In Tamil we say Adharam. It means the information used by the auditor in arriving at the conclusion. Basically, this is the proof based on which he is going to give what? The conclusion is nothing but the opinion. Yes. What it includes? Information contained in accounting records and also other information. Now, what is this accounting records? What is this other information? Accounting records is all your journal entries, accounting entries plus all the supporting records. That means the journal entries plus your invoices, purchase order and all. Invoice separately is given. Then contracts between two people, that also can be evidence. General and subsidiary ledger adjustments which is done, and Excel sheets, worksheets, spreadsheets, all that is information which is contained in the accounting records, which can be an audit evidence based on which the auditor is giving his opinion. What is the other information? The minutes of the meeting, Written confirmation from trade receivables, manuals of internal control, and any other information which is used as audit evidence. If information is used as audit evidence, it can come from the entity itself or it can come from the management expert. If it is coming from the entity itself, what will you see? You will be evaluating the accuracy, completeness, and sufficiency. If it is coming from the expert, what will you be evaluating? You will be evaluating three things again: competency, capability, and objectivity. But apart from that, you will also want to understand the work of the expert, whether it is appropriate for this audit evidence, what are the alternate sources which is available, then what is the complexity of the matter, that means whether there is an expert which is required for this job. Next, nature or extent of controls which is available and auditor's previous experience with the expert. Next comes audit procedures. What is in the morning? Error. What is error? External consultation, inspection, inquiry, re-performance, observation, analytical procedures, and recalculation. Now, what are the types of audit evidence? Based on two things, we have the types: based on nature and based on source. If it is depending upon nature, we have three: visual, oral, and documentary. Now itself I am asking you which one will have more reliability. Documentary evidence will have more reliability. Now depending upon source, internal and external, which one has more reliability? External. Purchase invoice, sales invoice, that example we saw, which one has more reliability? Purchase invoice, because it is external to the organization. Then comes sufficiency and appropriateness. Sufficiency means quantity, appropriateness means quality. So under sufficiency, what are the factors which is affecting the auditor's judgment? There are three factors: materiality, risk of material statement, and size and characteristics of the population. Now if materiality is high, then what happens to the quantity of the audit evidence? If something is very important, then you will want more audit evidence. Yes or no? So if materiality is high, you will want more audit evidence. So we call this directly proportionate. If risk of material misstatement is high, what happens to the quantity of audit evidence? It again increases. Yes or no? So again, it is directly proportionate. What is the third one? Size and characteristics of the population. Now if it is homogeneous in nature, everything is similar to each other, what happens to the quantity? It can be low. If it is heterogeneous in nature, then it has to be high. Now appropriateness means relevance and reliability. What is the meaning of relevance and reliability? Relevance is logical connection. We saw an example yesterday. What is it? Not the auto example, but overstatement and understatement of trade receivables we saw. Next comes reliability. When will you rely on the information more? When it is obtained from independent sources, when related controls are effective, when it is obtained directly by the auditor, when it is in documentary form, and when the document is a original document, then the reliability will increase. What is the meaning of audit trail? Documented flow of transaction, where in our flow example, Daimler AG example, where we saw that from the source document, it kept getting translated to the financial statements. Yes, maintaining records, log on, log off activity. We saw example for, in your ICA material, example is given. No, log on, log off for banks specifically they had shared. Yes or no? Next, log on, log off attempts we saw. Next, step-by-step record. All of these things we saw. Next is, what is the meaning of assertions? Assertions are representations which are made by the management. It can be explicit or implicit in nature. These are embodied in the financial statements. Now, if it is positive, that means they are saying it is there, and if it is negative, that means they are saying it is not there. Under positive, we have two types. So, what is it? Implicit and explicit. Under negative, we have two types. What is it? Implicit and explicit. For each of the things, we saw examples yesterday. Yes or no? For positive, implicit. What is the example we saw? Positive, implicit. We saw plant and machinery and depreciation for the previous year, depreciation for the current year, overall depreciation, and the carrying value of the machinery they had given. So when you just look at that information, what does it say? It says that the company only owns the machinery. It says that if you go and look at that place, you will actually see the machinery in that place. It says that the depreciation is as per the accounting policy only. So all of these things, it is said, but it is not actually written. That is why it is implicit. And when they are saying plant and machinery on the balance sheet, that means they are saying plant and machinery is there, yes or no. So it is a positive implicit assertion. What is the example we saw for positive explicit assertion? 5%. 5% secured loan, some amount if they had given. Directly they had given you the amount, directly they had given you the percentage also. Explicitly they are giving you all the information and they are saying it is there, so it is positive. So it is a positive explicit assertion. Under negative they are saying it is not there. Under notes to accounts they will be written there is no contingent liability. That means what? Explicitly they are saying something and they are saying it is not there. Not there means it is negative. And explicit negative assertion. What is implicit negative assertion? Implicit negative assertion. In the balance sheet, if you see, plant, land, building, everything is there, but about machinery they do not mention anything. So implicitly they are saying that there is no machinery which is there. They are saying it is not there, so it is negative, and implicitly they are saying so it is implicit negative assertion. Are you able to understand till here? Yes, essay 500 thorough? Good. Let's quickly see the summary notes, because I wrote it, it has become wow notes. Let's see the wow notes for essay 501. Audit evidence specific considerations for selected items. We saw 3 items here. What are the 3 items? Inventory, litigation and claims, and segment information. Under inventory, what are you seeing? What are the assertions? Existence and conditions is what you are seeing. So you will go and see the attendance. You will have the attendance for the physical count of inventory and you will be doing audit procedures. If that date physical count is not possible, then you will be doing it at a alternate date. Audit procedures will be done on intervening transactions. Intervening transactions means you will be adding the sales and subtracting the purchases on whichever date. The same example I have given here also. Yes, 1st April to 5th April. Say on 5th April you are going for stock count. The remaining days, the 5 days, you will have to add the sales and subtract the purchases to actually get your stock as on 31st March. If physical count becomes impracticable, then alternate audit procedures. If alternate audit procedure is also not possible, then SA 705. If the custody is of the third party, then you will ask him for the confirmation regarding quantity and the condition. Then you will see whether you are able to go and do the inspection. If that is not possible, then you have to go for other audit procedures. What are the other audit procedures? Mnemonic acid. A stands for another auditor will go and do the inspection. C stands for confirmation whether it has been given as collateral, whether it has been pledged. I stands for internal control. You will see how is the internal control of the warehouse person, the third party. You will see the internal control. D is documents. Yesterday itself I told you, if the internal control is strong, then your trust will increase on that number. Yes or no? So this is with regard to inventory. Matters relevant in planning attendance, that only this perpetual timing, instructions which is given, internal control which is relating to inventory, what is the stage of the inventory, nature of inventory, all of those things will come. The second one is litigation and claims. What is the assertion that you are seeing here? Completeness is the assertion. What are the audit procedures? First you will be doing the inquiry to whom? Management and the in-house legal team. The in-house person is no less or more than the management itself, because they are just employees of that company. Then you will be seeing the minutes of the meetings of whom? Of those charged with governance. Then you will see the legal expense accounts, and then any correspondence, if there is any, with the external legal counsel you will be seeing. When will you go and disturb the external legal counsel? In 3 cases: when the risk is high, when it is highly complex, or if there is a disagreement between the management and the external legal counsel, you will go and meet the external legal counsel. Always before you go and meet the external legal counsel, you need permission from whom? You need the permission of the management. And once you go to the external legal counsel, if he does not respond, what will you do? You will be going for alternate audit procedures. If the management is not giving the permission to go to the external legal counsel, what will you do? Alternate audit procedures. If alternate audit procedure are not getting sufficient appropriate audit evidence, then what you do? You go use your weapon, SA 705. Seek direct communication with external legal counsel when the risk of material misstatement is high, and if the audit procedures is saying that there is existence of other litigations, then how will you go and approach him with a letter? What is that letter called? Letter of inquiry. Now when you go and give that letter, if there is no response, what will you do? Alternate audit procedures. Again, alternate audit procedures, there is no sufficient appropriate audit evidence, you will go use your weapon. Next comes segment information. Segment information means you will be checking what? The presentation and the disclosure, whether it is as per AFRF. Obtain an understanding of the methods used, perform all your audit procedures, and obtain your sufficient appropriate audit evidence to ensure that the presentation and disclosure is as per applicable financial reporting framework. Nothing else is there in SA 501. Now we have to go through the warm notes of SA 570, right? What? Now let's start off with SA 570, going concern. We started with what? Objectives. Under objectives, what did we see? To obtain sufficient appropriate audit evidence. 2. For the appropriateness of the management's use of going concern. That means if it is really going concern only, if really the company is going on forever only, they can use the going concern assumption. To conclude that material uncertainty exists. Material uncertainty means there is a 50-50 probability that the going concern can get affected based on a future event or a condition which can happen. And the last objective of this standard is to report as per SA 570. The responsibility of the management is what? At any point in time, they have to evaluate the going concern of the entity. The following factors are relevant for judgment. What is the management going to see? They are going to see the degree of the uncertainty, size and complexity, nature and condition of the business, degree affected by external factors, and judgment about the future. Now you all tell me an example for size and complexity, nature and condition of the business. What is an example? Why should the management consider all of this for seeing whether the company is going concern or not? Why? This is basically factors that the management has to consider, correct? For the judgment of going concern. Why should they see the size, complexity, nature, condition of business? Why? If it's a big business, suddenly it has become small, the revenue has dropped, then yes, going concern might get affected. Okay, now you have covered the size. Complexity? Complex business. How many of you are trading in bitcoins, cryptocurrency? Nobody? Nobody is trading in crypto. You are trading in cryptocurrency? You have entered into that. You put your money in some place, Ethereum. Where did you put?
I put in Ethereum only.
How correctly what I said you put? There is Doge coin, there is Mana coin, there are so many coins. But do we understand that? No. But can we make money through that? Possibility. Can make in lakhs, can make in crores, but the downside is also big. If the sky is the limit, then basement also is the limit for you. That you must understand. It is very difficult to understand that kind of business. Complexity of the business. Now, you are having a portfolio management company, where this entire portfolio management is only for these bitcoins, Ethereum, Mana coin, Doge coin, where no one understands. Simply if I say Gafu coin, will you question me? It is not even there, Gafu coin. Simply I said, along with Mana, Doge, if I include one more coin, no one will question because you all don't know. Yes or no? I will simply say Nivedha coin also. How you will know? You won't understand. You will think, oh, maybe it is there. Whatever she says, we'll just nod and go on. You will feel like that. So if there is a complexity, then I'll take all your money. I'll say portfolio manager. I'll take all your money. I'll run away with the money. Or I'll say I'm putting it there. What can I do? Bitcoin is falling. What can I do? It's not on me. So it's a complex business. So going concern might get affected. Nature and condition of the business. Why is the nature of the business important? Tourism industry, during COVID, what happened? Going concern got affected. Hotel industry, during COVID, going concern got affected. Yes or no? Pharma industry, during COVID, boomed. Influencer industry during COVID boomed like anything. Yes or no? Influencers are charging 3 lakhs, 5 lakhs for just a reel. They'll come and dance and get 5 lakhs and go. For a reel, they're charging 5 lakhs rupees. So, we can't blame COVID. We cannot say COVID is taking off all the industries. The nature and condition of the industry is a problem, not COVID then. So, the size of the business, complexity of the business, nature and condition of the business, degree affected by external factor. External factor is the COVID. How much is your business getting affected because of an external factor? All that you will have to see, make the judgment about the future and then only determine whether the company is going concern or not. Then came the implications. Implications when the financial statements are going concern and the auditor feels that it is inappropriate, then in that case there is sufficient appropriate audit evidence that there is a material misstatement, and of course if it is inappropriate, going concern will affect all the other items in the financial statement, so it is pervasive nature. So what opinion will the auditor give? Adverse opinion. Now the financial statement is as per going concern only, but there is a material uncertainty. Will you give an adverse opinion? No. You will have to check for what? Whether it is disclosed or not. If it is disclosed, you will be giving a clean report, you will be giving an unmodified report. If it is not disclosed, you will be giving a qualified report. If it is not pervasive, if it is pervasive, you will be giving an adverse report. So qualified or adverse report based on the facts of the case. The next is management unwilling to extend the assessment. That means they are not doing any assessment. They are unwilling to do it. Then there is no sufficient appropriate audit evidence. If there is no sufficient appropriate audit evidence and there is a material misstatement based on the pervasiveness of the case, you will be giving either a qualified or a disclaimer of opinion. Is that clear? Next is examples of events or conditions that cause a doubt on going concern. 3 items we saw: financial event, operating event, other events. I told you how the question also can be asked with respect to SA 570. They can pick any one example, make that as a big case study, and you will have to know adverse financial ratio or arrears or discontinuance of dividend or loss of a major market share, loss of key customer, loss of a material supplier. All of these are examples for going concern. You need to map it in your mind such way. Alright, with this SA 570, going concern comes to an end. Very simple. If you look at the summary notes, SA 560 subsequent events, we started off with what is given as per accounting standard. What is adjusting, what is non-adjusting. Adjusting means evidence of conditions that existed at the date of balance sheet. Non-adjusting means evidence of condition that arose after the date of the balance sheet. Now as per SA, there are only 3 cases which is given. What is case number 1? Events occurring between the date of financial statements to the date of audit report. Date of audit report 21st June in our example, so 31st March to 21st June right now. Auditor shall perform audit procedures to obtain sufficient appropriate audit evidence. Or understand the procedures that the management performed to identify the subsequent events. Inquiry, minutes of the meeting and interim financial statements. Now inquiry directly if you ask, they are not going to give. That's why we have AAA, BCD. What is AAA, BCD? If there is any accounting policy, accounting adjustment, acquisition of assets. B is borrowings, contingency, and whether assets has been appropriated by the government or destroyed. Next, will you just stop it like that? Link to SA 580 is given here. What is that link? They are saying you have to get a written representation from the management saying subsequent events have been appropriately adjusted for if required. Case number 2. First one we saw, this was events occurring. 2 and 3, it is going to be the facts which come to know for the auditor after the date of audit report. But here in case number 2, it is before the financial statements are issued. Does the auditor have any obligation? No, auditor has no obligation to perform audit procedures after the date of audit report. So he has to discuss with the management and TCWG, determine if the financial statements need any amendments, inquire how the management is going to address this in the financial statements. If the management amends, matter is very easy. You do the audit procedures, get the audit evidence. If the management does not amend, now you see where is that audit report. If you only have the audit report, weapon is still with you, so you immediately modify the report. If you have given the audit report to the management, then you ask him not to issue. Nevertheless, if he issues, then you have to seek prevent the reliance. They are not saying how you will prevent the reliance. You put the WhatsApp status, Instagram reel, TikTok, you dance, you talk somewhere, or you put the LinkedIn status. Don't care. You have to prevent the reliability. Case number 3. Facts which become known to the auditor after the financial statements are issued. Here also auditor has no obligation, but he shall discuss the same with the management. Same 3 points as there you will see. Now, will the management amend or not amend? If they don't amend, then you have to prevent the reliance. If they amend, you will be doing the audit procedure with the audit evidence, but you will also be answerable to whom? Already issued people. So you have to somehow inform to them that this audit report does not hold good. You have to inform to the already issued users. And in the new audit report, there should be some linkage to the old audit report. That link will be given in SA 706, EMP and OMP. Small standard, easy standard, SA 560, subsequent events. Is that done?
SA 505 is what? External confirmation. External confirmation means what? Is it an audit procedure or an audit evidence? External confirmation is the audit procedure. Yes or no? Yes, external confirmation we saw as an audit procedure in SA 500 error. That E stands for external confirmation. Now the definition of external confirmation is you are doing the audit procedure for what? To obtain audit evidence. The audit evidence obtained as a direct written response. To whom? From whom? To the auditor from the third party. In what form? In paper, electronic or any other medium. Now what are the important terms? We saw 4 terms. One is positive response, negative response, non-response and exception. Positive means what? Whether he agrees or disagrees, he will be answering. Negative means what? Only if he disagrees, he will be answering. Can you use negative in all circumstances? No. When will you use negative? When the risk of material misstatement is low, when the population is small and homogeneous account balance, class of transaction and disclosure. When you know that when you ask them that the exception rate will be low and you know that he will not throw the request in the dustbin, will not disregard the request. So negative confirmation uses are only these 4. Now coming back here, what are the uses of external confirmation as such? You can confirm the terms of the agreement. You can confirm for any contracts or any transactions with 2 people, with the entities and also with the third parties. If there is any amount which is due to the lenders which is showing in your balance sheet for a long time, you can get an external confirmation directly with those lenders. And if there is any title, property title deed which has been given as a collateral, that also you will be able to check. So these are the uses for external confirmation. Now I have one question. I am an auditor of a company. I am not able to go. So I am sending another auditor to go and conduct the audit. Now that other auditor did the external confirmation and he is giving it to me. Is that considered as an external confirmation? Why? It should be direct written response. Are you able to understand here the meaning? It is a direct written response. Only 2 parties here. To the auditor from a third party. Are you able to understand? Clear, guys? Now for external confirmation there are a few procedures which you have to follow. What is the information that you want external confirmation? To whom you should ask that external confirmation? The way you design the request for that external confirmation, most important, I told you, because there are so many factors which is going to directly affect the response rate. On the basis you are going to design the request. What is the assertion that you are addressing? Any specific risk if you are addressing, including financial reporting framework. What is the layout of that letter that you are going to send to them and the presentation? Do you have any prior experience? If you do, then that is going to be of help. And what is the method of communication? So usually when you go for external confirmation, the management has to give what? They have to give the authorization for you to go. So whether the management is giving you the authorization, whether that person has the ability to even confirm whatever you are asking, all of these directly affect the response rate that you are going to get when you are sending the external confirmation. This comes under design request. Then you will be sending the request, and will you leave it like that? Sending the request including follow-up request. Very, very good. Now, when you go and ask the management, is the management going to say yes, yes, you disturb whomever you want? They are going to refuse. So, management's refusal to allow the auditor to send the confirmation request. Now, what are you going to see? Whether it is reasonable or not. What example did I tell you for that reasonableness? Fights, or there is a legal suit, or there is a dispute between two people, then don't go and ask them. Of course, they are not going to respond to you. Now, if it is reasonable, then you will be performing alternate audit procedures. But when you are doing alternate audit procedures, you are not able to do it. Then what will you do? You will modify, no doubt, but you have to communicate with those charged with governance as per SA 260. If they are giving you some reason which is not reasonable, then also you will modify, but in that case also first you will have to communicate with those charged with governance. Now, with the results of external confirmation, now what do you have? You have your trust issues, you have your doubts about the reliability, or you are concluding that it is not reliable at all. There is also one more scenario where you don't have any doubts about the reliability, then no problem at all. Doubts about reliability, what will you do? Further audit evidence. If it is not reliable at all, what will you do? Evaluate the implications on the assessment of the risk of material misstatement. If it is not that material, then you will leave it. But if you are seeing the implications, but it is very material, then you will be revising the risk of material misstatement, and you will be designing the further audit procedures accordingly. The same concept. Are you able to understand? With this SA 505, external confirmation comes to an end. Do it now. Very good. SA 520 is analytical procedures. We started off with what? The meaning of analytical procedures, the evaluation of financial information through analyzing the possible relationships between financial and non-financial data, and types of analytical procedures. In all the 5 types, you compared with only one data. What is that one data? What? Comparison of the client data with industry data, similar prior period data, client determined expected results, client determined expected results for non-financial data, and auditor determined expected results. Now, what is the objective of the auditor, or what is the scope of this standard 520? To obtain audit evidence, reliable and relevant and reliable audit evidence. Then they will design and perform the analytical procedures when at the near end of audit to assist forming the overall conclusion. So first they are doing the analytical procedures to obtain the audit evidence. Then again they will be doing the analytical procedures near the end of audit, because we know that the timing of analytical procedures is through all the stages: planning stage, testing stage, and the completion stage. What are the techniques? 4 techniques we saw, and for each I gave you examples. What are the techniques? Trend analysis, ratio analysis, reasonableness test, and structural modeling. When designing an analytical procedure, the auditor should see what? SHRED, SRED. Determine the suitability, evaluate the reliability, develop expectations, and determine the acceptable difference. So what is the purpose of doing this analytical procedures? To see if the account balance class of transactions appear reasonable. It helps to identify any unusual state of affairs, unusual transactions, unusual relationships, all of those things because of fraud. If they are doing something, to identify your risk of material misstatement, it is useful to do these analytical procedures. What are the factors that you have to consider when you are going for analytical procedures? Is that air conditioner on? Yes? Okay. Now what are the factors to be considered? The first factor is availability of data. The second one, disaggregation. What type of account it is? What is the source of that data? Are you able to predict that data? What is the nature of assertion? And lastly, inherent risk. Now, with the result of the analytical procedures, are you going to do the analytical procedures and keep it with yourself? That is a waste of time and energy. You have to go and inquire with the management and TCWG, and ultimately you will have to see whether other audit procedures are required. Now, auditor will be making the conclusion what is he going to do with the conclusion? It helps him to basically corroborate with other conclusion. It helps him to draw reasonable conclusion on the overall financial statements, and this results may identify any previously unrecognized ROM. If there is any previously unrecognized ROM, now he is going to add that and revise the entire risk of material misstatement and design the FAP accordingly, further audit procedures accordingly. Yes, clear? Now it looks easy, essay 520, guys. Good.
Let's quickly revise what we saw in government audit, guys. Government audit is a objective, systematic, professional and independent examination of financial, administrative and other operations of a public entity made subsequently to their execution for the purpose of evaluating, verifying and presenting the report. And in the case of financial statements, here also there will be given a opinion. Who appoints? The C&AG appoints. Now, what are the objectives? Accounting for public funds. I told you why they have given accounting for public funds. Appraisal of the government policy, and this is also base for corrective action. Here you need to understand if there is any expenditure which has to be made, it has to be done only from where? The Consolidated Fund of India. The Consolidated Fund of India is an account where all the money for the government comes inside, and any money which is expended also comes only from the Consolidated Fund of India. Now for any expenditure, the first step is to get a rule and order. From there it is translated into sanctions. This sanction can be either a general sanction or a special sanction. Now from there, after that sanction, the sanction letter, if you go and show, then they are going to provide the funds for you. Provision of funds by way of appropriation bill will happen. Then comes what is proprietary audit. What is the meaning of proprietary audit? You will be seeing that the expenses which has been incurred by the government is lesser than the occasion demands. How much it has to be there, that much only should be there. Not even 1 rupee more should be there. And money should not be used for own advantage. And public money is not for a specific section of people. Next we went to what is performance audit. Under performance audit there is economy audit, efficiency audit, effectiveness audit. What is economy audit? That the resources that the government is acquiring, be it physical resources, human resources or any kind of resources, it has to be acquired at a economical price. Efficiency means what? At that particular time, whatever they are saying this project will get completed, it has to be used for that purpose only, and it has to be completed in that particular time. That is efficiency and effectiveness. But there are a few exceptions for this. When is there an exception for this? When for it is not used for a section of people, that time there are few exceptions. When if it is because of a policy or custom, if the amount is very insignificant, don't waste your time in that. Travel allowance should not be made for profit. And if a claim is enforceable by court of law, then that is also an exception. It can benefit a section of people. Next comes audit of receipts. What did we see in audit of receipts? All the revenue of the government should be correctly assessed, realized and credited. Now receipts, now what type of receipts are there? Revenue receipts and capital receipts. Under revenue receipts, what type of? Tax revenue receipts and non-tax revenue receipts. Example for non-tax revenue receipts. Example for non-tax revenue receipts. Tax mark, fines, fees, interest, all of those things are non-tax revenue receipts. On the other hand, we have capital receipts. Under that, debt capital receipts and non-debt capital receipts. Any receipt, when they are getting a loan, it is called as debt capital receipt. What is an example of non-debt capital receipt? When you are giving the loan to some other government and they are giving the money back to you, is that a receipt? Yes, recovery of loan is a receipt and it is a non-debt capital receipt. One more example I gave for non-debt capital receipt. Disinvestment or divestment, which is the opposite of investment. That time also there is a receipt and it is a
non-debt capital receipt. Now coming to audit of receipt. Whatever revenue is there, it has to be correctly assessed, realized and also credited. Adequate regulation and procedure must be framed by the department or agency to ensure that all the revenue have been correctly assessed, realized and credited. If there are any rules which is made, is the rules actually followed? Rule means what? U-turn edukra time la there has to be a policeman there, like that they are having a rule. If there are any irregularities, double refund, loss of revenue for the government, auditor has to find them. Review of all the systems and procedures and extent and quantum also auditor has to see. Will government have inventory? Yes, for ration they'll be having rice, sugar, all of those things. Those inventory is that audit of stores and inventory. For that, what is the auditor going to check? The auditor will see what is the regulation which is governing for the purchase, custody and the sale, because inventory means you need to purchase that inventory, then you have to store it in a particular place and the sale happens from the stock which you have stored only. If there is any deficiency in the quantity of stores or any defect in the internal control, the auditor has to check that. Then for the purchases now it becomes a expenditure. Then there has to be a rule and order, there has to be a sanction, there has to be an appropriation bill, whether all of those things have been followed. Whatever price that they are purchasing, whether it is reasonable or not. If there is any idle inventory, how are they going to take care of wastages and all of those things. And finally, inventory in sonale, valuation and physical verification will be there. That point is also there. Next comes C&AG. Under C&AG we saw three different things: roles, powers and duties of Comptroller Auditor General. Roles means what? These are the functions for C&AG. Roles means these are the functions of C&AG. Duties means what? This is the responsibility of the Comptroller and Auditor General. Power means what? Authority is given by the law to inspect the books of accounts. Or if he does not want to go, he will say, book come here, towel come. He will require any books or paper or accounts to come to any other place. He can question, observe or call for information. Power to dispense with any part of detailed audit and also apply limited checks. All of this is also called authority. Next comes roles of C&AG. We already saw for the government company auditor, the C&AG will be appointing. That is his first role. He can conduct two types of audit. One is supplementary audit and test audit. Supplementary audit means what? Test audit means what? It is like a re-audit. Supplementary audit. Test audit means only a specific portion he is going to conduct a audit against. Specific area. Redo means test audit. Supplementary audit means within 60 days from the receipt of audit report, he can authorize persons where he can comment on the supplementary audit as well. Next is duties of Comptroller and Auditor General, also called duties. Means responsibility. He has to do is who do this compulsorily: compile and submit the accounts for the union and state. To whom? To the President of India. I asked you who is the President of India in this class. Good, all of you knew who is the President of India. General provisions which are related to audit. What are the three accounts that we saw? Consolidated Fund of India, Contingency Fund of India and Public Account. Consolidated Fund of India is like a bank account. Contingency Fund of India is like a petty cash account, emergency fund. You will take the amount and then once you need to maintain that specific level, from where are you going to take it? Again from Consolidated Fund of India you are going to take the money. The last one is called as public account. Public account means the money which has been taken from the public. Anytime when they ask, I have to return it back to them. So the government will keep that as a separate account, that is public account. Then auditor will have to check for audit of receipts and audit of expenditure. And if it is substantially financed, then audit all the receipts and expenditure. Substantially financed means what? More than 25 lakhs grant or loan has been given and amount is more than or equal to 75% of the total expenditure. If it is like that, then we will be saying that it is substantially financed. Audit of grant or loan. I told you what is grant, what is loan. Audit of receipts of union territory. That time auditor can examine the accounts. Audit of accounts of stores and inventory. C&AG has the authority to audit that report also. Audit of government company and corporation. Appointment of auditor under section 139 subsection 5 or 139 subsection 7. Direct the auditor to the manner of audit. Auditor shall submit a copy of the audit report including the directions by C&AG, actions taken and impacts on the account. With that, government audit revision of WAV notes is done. Shall we start off with the WAV notes of SA 230 audit documentation, guys? Let's quickly revise what we saw in the first half of the day. We started off with definition of audit documentation, record of audit procedures performed, audit evidence obtained, and the conclusions that the auditor has reached on paper, electronic medium, or any other media. Objectives is what? This forms the basis of the audit report, and this is the proof that everything is in accordance with standards on auditing only. Audit documentation includes claims. You know what is claims. What is purpose of audit documentation? It helps the engagement team to plan and perform, direct and supervise, and also be held accountable. All of this I put it in one point. You know how to write. And then the next point is it helps for the future audit, and if there is any external inspection, you can throw this audit documentation on their face. And as per SQC1, they are talking something about audit documentation, so for that also this standard is helpful. The form, content and extent of audit documentation. The auditor shall prepare the audit documentation that is sufficient to enable an experienced auditor with no connection of the audit to understand audit procedures performed, audit evidence obtained, and the significant matters which was seen. Audit documentation depends on factors like, you know, what extent you have to go inside, what depth you have to do the audit documentation. For that, factors: size and complexity of the entity, nature of audit procedures performed, identify the risk of material misstatement, significance of audit evidence obtained, nature and extent of expectations, audit methodology and tools need to document a conclusion. What is the meaning of audit file? One or more folders of storage media in physical or electronic form containing the records that comprises audit documentation for a specific engagement, and the completion of this must be done within 60 days from the date of audit report or group audit report. What is this? When should you do the audit documentation? On a timely basis. It should not be done after the audit itself is completed. What happened? Did I do something? Timely basis, it has to be done, not after audit. If there is any change in audit documentation, it is change in audit documentation. Change in audit documentation, if there is any administrative changes, then you can do it. But what are the administrative changes? Standard itself is saying deleting superseded documents, sorting, collating and cross-referencing the work papers, sign off any related to file assembly or documenting the audit evidence even before the date of audit report. You can do it at a later stage. SQC1 is talking about three things. SQC1 is sonale. What is the words you will have to use? Policies and procedures for timely completion of assembly of audit file. The retention is given as minimum of 7 years from the date of audit report or group audit report. Part of documentation means it is the summary, that is completion memorandum, where it will comprise of the significant matters which is identified and also how they are addressed. The owner of this audit documentation is given as per SQC1. Who is the owner? Auditor. But if law regulation is saying, or if the client is asking, you can give copies of your work papers to the client. Clear, guys? With this, SA 230 is done. Now you can find out. Do you all remember SA 510? Initial audit engagement, specifically with reference to opening balances. I hope you are able to recollect all the examples I told you why they are saying opening balance. I showed in the P&L you have current year, previous year. So from that previous year also you are putting your signature. So this standard is coming when the financial statements for the prior period is not audited at all, or it is audited by some other auditor, that is a predecessor auditor. If you yourself are the auditor for the previous year, will the standard come? No. So what is the objectives of this standard?
to provide sufficient appropriate audit evidence that the opening balances, if it is having a material misstatement, whether it is affecting the current year or not. And they are also talking about consistency in the accounting policy. That is also a objective of this standard. Audit procedures regarding opening balances. What are you going to do? You're going to read the recent financial statements. Then you will obtain sufficient appropriate audit evidence that in the opening balance, if there is a material misstatement, whether it is affecting the current year or not. How are you going to do it? There are 3 points. One is in the closing balance, apdiye when you are writing it, you might miss a 0 or you might add another 0, whether it has been brought forward correctly. Appropriate accounting policies, whether it is there. Previous year financial statement, if it is audited, perusing the copies of the audited financial statements. With that, you can do the audit procedures of the current year relevant to the opening balances, or you can specifically you can do audit procedures to obtain evidence regarding opening balances. I hope you are able to remember. Now coming to the cases. If there is an audit evidence that in the opening balance there is a material misstatement and it is affecting the current year, it is material, then what will you do? You will be doing additional audit procedures. If the misstatement still exists, then you will communicate with management and TCWG as per SA 260. Accounting policies, they are not consistent. Then any change in accounting policy which is not accounted for or not disclosed properly or not presented properly, then direct 705, you will be either giving a qualified or a adverse opinion. This is with respect to SA 510 Vav notes. 2.5 minutes. Just let's quickly finish SA 550 in less than 5 minutes, guys. The scope of related party standard. What are they saying? It is the auditor's responsibility regarding 2 things: related party relationships and related party transactions. What is the definition of related party? What happened? What happened? Oh, balloons are coming. How did that come? Online students will be thinking, what is this ma'am taking class? Now, please see, definition of related party includes related party defined under AFRF. If it is not defined, then only you will see what is given in this standard. What are they saying? Person or entity has control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. That means all the holding companies. Another entity over which the reporting entity has control or significant influence directly or indirectly through one or more intermediaries. That means all the subsidiary entities. Another entity that is under the common control with reporting entity having common control ownership, common key managerial persons or owners who are close family members, then they will also be called as related party. Now, what is the meaning of control? What is the meaning of significant influence? I told you example. Full control, what is there? If you are in Bangalore and if you go for night show, still it keeps coming to your head. That is influence, significant influence. The power to govern the financial and operating policies. Control is the power to govern the financial and operating policy to obtain the benefits from its activities. Significant influence, they can influence by way of share of ownership or by way of statute or by way of agreement. They have the power to participate in the policies, but they do not control. Next, nature of related party transactions and related party relationships. If they are in the normal course of business, then do we have any problem? No. What are the other names for normal course of business? Ordinary course of business and arm's length price. If it is there, then you will say that risk of material misstatement is low. Sometimes risk of material misstatement can be high when the complexity is high, if the information system itself becomes ineffective, or if it is not in the normal course of business where they charge low money or no money, then that time you will be saying that it is high risk of material misstatement and related party transactions exist. Following relationships have either control or significant influence, where there is a direct or indirect equally holding or a financial interest in the entity. Reporting entity holds direct or indirectly in another entity, or TCWG or KMP, family member of the TCWG or KMP, significant business relationship with TCWG or KMP. Auditor can inquire with the management. What are the things? Identification of related party, including what are the changes from the prior period, what is the nature of relationship that you have with them, and all the transaction details you can ask the management. Here also directly they're not just saying you have to inquire, they're saying exactly how you have to inquire. Now risk assessment procedures to understand the controls. What will you do? Identify the account and disclose related party transactions with RPT, with AFRF, and authorize and approve related party transactions that are outside the normal course of business. Is there anybody there to authorize and approve? You will be seeing. Now even if you inquire that way, you might not get information from the management, so you will be seeing yourself, you will be verifying yourself by way of Shri Clips CCC. What is Shri Clips CCC? You will be seeing shareholders register, you will be seeing the regulatory authorities if they have filed any documents, you will check the IT returns. What is Clips? Conflict of interest document with the management at TCWG if they have any conflict of interest, that you will see. Life insurance policy, internal auditors report if they have received any professional advice from an external party, or any report which is given to the securities regulators. What is CCC? Contracts with the KMP and TCWG, contracts which are not in the ordinary course of business, contract which undergoes a lot of negotiations, renegotiations. This is essay 550. Exactly 5 minutes. Half a page, essay 580. It is a written representation. You are able to read it, right? You are able to, that CR, MM, FS. I hope by now you all understand what it is. That's why I want to go through it when you all are there, so that you will be able to understand at a later stage as well when you're revising. Essay 580 is written representation. What is the meaning of written representation? It is a written statement by the management to the auditor as a direct written response for confirmation and support audit evidence. It does not include financial statements, assertions, or books of accounts, even though it is a written statement by the management and given to the auditor. I hope you remember that. Yes, what is the objective of the auditor? Preparation of the financial statements and for the completeness of the information. Support other audit evidences, other essays if it requires, then you have to get the written representation. Many essays we saw. Essay 560 we saw. Where else we saw? Where else today we saw in one place? Where in 450 we saw? Where else did we see? Written representation. Written representation. In 330 we saw. Today itself we saw in two places, 450 and 330. Apart from this, in 560 subsequent events, there also they will be getting a written representation. So if some other standard requires, then you will have to get a written representation for that. Then you will have to respond appropriately. That is the objective of this standard. Why written representation about the management responsibility? Again and again you are getting, because the person who has signed, he might no longer be responsible for that role, or audit engagement, it is prepared in the previous year. Management has misunderstood his duty, or if there is a change in circumstances. Very good. To respond appropriately. Now the written representation has been given. The auditor has to respond appropriately. If it has been given, what is he going to check? Whether it is reliable or not. Then he will check the effect on audit evidence. If it is inconsistent with other audit evidences that he has received, then he will perform other audit procedures. If it is unresolved, then he will reconsider the assessment and the effect on the audit evidence that he has received. If it is not reliable, then he will use his weapon essay 705 and he'll be giving a disclaimer of opinion. This is a standard where in both the cases disclaimer of opinion. If it is not provided at all, discuss with the management, re-evaluate the integrity and check the reliability, and finally again you will be giving a disclaimer of opinion. Now, can the written representation be after the date of audit report? No, it has to be near as practical to the date of audit report. Is that clear? SA 580 also completed.
Let's quickly see this, guys. In 5 to 10 minutes, I'm going to finish off entire SA 710, and trust me, you'll get full conceptual clarity after this. Now, SA 710 is talking about two things: corresponding financial statements and comparative financial statements. Which one did we do first? We did the corresponding figures first. So first here also I'm going to do the corresponding figure. Corresponding figure means auditor's opinion refers to the current period only. It refers only to the current period. Now the first scenario is saying in the prior period the audit report is saying there is a qualified adverse or disclaimer of opinion and the matter is still unresolved. Then in the current period also you will be modifying your opinion and you will be giving a qualified or adverse or disclaimer of opinion. And a new thing we saw here, that in the basis for modified opinion paragraph you have to mention it. The second one is there is an audit evidence that there is a material misstatement in the prior period and he has given a clean report. The previous auditor has given an unmodified report. Now you have to check whether material misstatement has not been dealt with in the current period. If it has not been dealt, then based on the pervasiveness, you will be giving either a qualified or a adverse opinion. The third scenario is in the prior period it is not audited. Then you will be mentioning that in other matter paragraph. In the prior period it is audited by some other auditor. Then you will be mentioning again in the other matter paragraph three things. What are the three things? That the financial statements is audited by a predecessor auditor and the type of opinion. If it is a modified opinion, then the reasons for the same and the date of the report. Very clear? Okay. Corresponding is clear. Now coming to comparative financial statements. Here auditor's opinion refers to each of the prior period. I gave you example as to how he can refer to each of the prior period. Now audit procedures determine if financial statements include comparative information required by AFRF and are appropriately classified. So if there is any mentioning of 5 years back or 6 years back, see if they have mentioned it as per applicable financial reporting framework. Comparative information agrees with the prior period or not. How are you going to do? You are going to go back to that 5 or 6 years back and you are going to see whether the same amount, same nature of transaction is there. Accounting policies, whether you are going to see whether it is consistent or not, and if there is any changes, then the reasons for the same has to be properly disclosed. This is the audit procedure. Now coming to the cases. If there is a possible misstatement in the prior period, when are you finding that? When you are doing the audit of the current period, you are finding a mistake 5 years back. What happened? You are having a question. Then for that you will be doing additional audit procedures to determine whether material misstatement still exists. If you only are the auditor for that prior period also, then SA 560 subsequent events you will have to follow. If auditor only has audited for the prior period, SA 560 and also 580 written representation will be applicable. Now in the prior period it is audited by the predecessor auditor, then in that case same as what we saw for corresponding. If it is audited by predecessor auditor, you have to mention in the other matter paragraph of the current year saying that it has been audited by predecessor auditor and what is the type of the opinion, and if there is any modification, the reasons for the same and the date of the audit report has to be given. Now if the auditor's opinion is different from the prior period auditor, that means previously has given one opinion but the current period auditor is feeling that is a mistake. Now he has to communicate with whom? TCWG, and ask the TCWG to communicate with that predecessor auditor. Now where were we? Predecessor auditor unmodified or different, disclose the reason for difference, SA 706 OMP. Predecessor auditor unmodified, current year auditor is feeling material misstatement exists in the prior period, communicate with TCG and request to inform the prior auditor. If the prior period auditor is giving a new report, he is convinced and is giving a new report, now you will mind your business and you will only take care of the current year auditor. If the prior period is not audited at all, you will be stating it OMP, and just because you have stated an OMP, it does not relieve you of your duties. Clear? Now, do you have the grip on SA 710? Yes, trust me, only because you did it on the same day, you are having the grip. Again, go home. Even if you don't do other standards, it's okay. 710, so many case studies. At least 6 or 7, I think, they can ask questions here. 6 or 7 types of case study based questions they can ask here. Be very, very careful if there is a question with regard to SA 710. All right, guys.
Welcome back, guys, after the short commercial break. Now, let's quickly see what is there in Caro. This one I did not write. A student like you all wrote this, and you know what? His age is 61. 61, and he made this Caro short form in a single page. He has actually written everything, including applicability. Now quickly let's revise using his notes. Now this is because he did so beautifully. Come back guys. How many clauses are there? 21 clauses are there. I hope all of you remember. Yes. Clause number 1. Under fixed assets, the first point is talking about records. The records for tangible, the details and the situation must be there. For intangible, full details must be there. Physical verification, whether at reasonable intervals, whether it is there, and if there is any material discrepancy, you will have to check. What is the title deeds of the fixed assets? If it's an immovable property, then there was a format which is given below. If the revaluation percentage is more than 10%, if pending proceedings, again pending Benami Transactions Prohibition Act, then that also you will have to mention that separately. Clause number 2 is only 2 points in the clause number 2. Physical verification has to be done, and if there is any discrepancy more than 10%, then you will have to check that and write that separately. For aggregate working capital loan more than 5 crores at any point in time, what should you check? That the quarterly statement which has been filed with the banks or financial institutions must be as per the books of accounts. Legs provided to subsidiary joint venture associate, outstanding plus aggregate, to other than subsidiary joint venture associate, same outstanding and aggregate. Apart from this, there are more points. What are the other points? Should not be prejudicial to the interest of the company. There should be a repayment schedule. If there is any loan given for an on-demand loan, then that has to be separately. If it is overdue for more than 90 days, then that also has to be separately given. Any fresh loan has been given to renewed or to extend an existing loan, then that has to be separately mentioned. Now, leaks provided under section 185, 186. Deposits, section 73 to 76. Cost records, section 148, subsection 1. For statutory dues, there is disputed statutory dues and undisputed statutory dues. If it is a disputed statutory due, then you have to give the amount and the forum in which it is pending. Undisputed statutory dues, if it is outstanding for a period of more than 6 months, you will have to mention that. Undisclosed income, unrecorded income, but you have disclosed it in the current year under the income tax assessment, then the details of the amount which has been surrendered has to be given. Next comes repayment of loan. The company has defaulted in principal or interest, then there is a format which you will have to follow. If the company is a willful defaulter, then he has to mention that separately. If the term loan is used for any other purpose, then amount and the nature of that loan has to be given. Short-term loan is used for long-term purposes, then that also has to be told separately. If the amount is taken to meet the obligation with a subsidiary joint venture associate, or if an amount is taken with the equity percentage with a subsidiary joint venture associate, that means for subsidiary joint venture associate, then that also has to be mentioned separately. Issue proceeds by way of IPO and FPO, section 42 and 62. Clause number 11 is talking about fraud. Any fraud on the company or by the company has to be mentioned. Section 143 subsection 12 says if the amount of fraud is less than 1 crore, then you have to mention to the board of directors and audit committee. If it is more than or equal to 1 crore, then you will be telling the central government in form number ADT 4. Nidhi company, what are the 2 rules that has to be the net owned funds is to deposit should be in the ratio of 1:2. 20, and 10 percentage of unencumbered term deposits must be there. If there is any default in repayment, whether it is principal or interest, and whether there is a default, you will have to mention that separately. Related party transaction, what is the section? Section 177 and section 188. Internal audit must be commensurate with the size and nature of the business, and whether the statutory auditor is considering the report of the internal auditor. Non-cash transaction, section 192. RBI registration, section 45IA of the RBI Act, whether he has to get himself registered or whether he is undertaking any non-banking financial activities or housing financial activities, and whether there are any core investments companies. If there are, how many are there? Number only, if you mention it is enough. Cash losses, you just need to mention the amount of cash losses. If there have been a resignation for current year and previous year, very good. Resignation of statutory auditors. If there was any resignation, then you will have to check what are the issues, objections and concerns which are raised by the outgoing auditors. Going concern, you will have to see whether there is a material uncertainty and whether they are able to pay off all the liabilities within a period of 12 months. Next is CSR. Two parts, ongoing project, other than ongoing project. If it is still ongoing, you will be transferring it to a special account called a section 135 subsection 6 for ongoing project. Other than ongoing project is 135 subsection 5. You will be transferring within the 6 months from the end of the financial year. Clause number 21 is consolidated financial statements. If there is a qualification or adverse remark in the consolidated financial statements, then the para number of the CARO in which that qualification was there, you just have to mention that. That's it. Then we went to applicability, where every company, including a foreign company except a banking company, insurance company, section 8 company, 1% company, or a small company, paid up capital less than or equal to 4 crores and turnover less than or equal to 40 crores. Do not forget. And if it is a private limited company, if they are under this, that is paid up share capital plus reserves less than or equal to 1 crore as on 31st March, and borrowings at any time from banks or financial statements have gotten more than 1 crore, and if turnover including discontinued operations, if it is more than 10 crores, then only CARO becomes applicable for them. Now, what is written here? Public company should not be a holding company. Public company should not be a subsidiary company for this reporting entity. Are you able to understand? If it is there, then it automatically becomes a big company. Big company, what is applicable? CARO is applicable. Isn't that easy, guys? Very easy. Essay 299 talks about joint audit. Try to recollect the points. That's the whole purpose, not to simply read and go. Try to recollect and to actually put everything in one page. It actually requires a lot of effort, yes or no? And this is done only for you because it will be easy for you for that one day before exam. So essay 299, joint audit, is divided based on assets and liabilities, income and expenditure, geographical area, identified units and period of financial statement. I have given example for each. And if the audit work is divided, then who has what responsibility? That auditor, that responsibility. Individual or separate responsibility. If the audit work is not divided, then there is a joint or combined responsibility. For who? For what are the work that all the auditors will have a joint responsibility. For all the work that is not divided, any common audit areas, matters brought by one person and agreed by law, and these three, that the financial statements are as per law, financial statements are as per AFRF, and audit report is prepared as per the standards on auditing issued by ICAI. Now, what is the audit reporting in case of joint audit? If they all have a single opinion, then they will be giving a single audit report or common audit report. If there is a difference of opinion, then each person will give a separate audit report. Maximum how many audit reports can be there? Very good, only 4 audit reports. Now, if there are different audit reports, in which paragraph will you give mention? In the other matter paragraph, you will have to mention. Next is advantages and disadvantages. Advantages, expertise. I hope you remember the example. From this class I picked up 3 or 4 people, and for that I gave advantages. And from this class I picked one boy and said comparing with KPMG or Deloitte or PwC, then if they are also there, he is also there, then what are the disadvantages? Advantages: sharing of expertise, mutual consultation, lower workload, higher performance, higher service, lower staff cost, lower overall cost, and there is a healthy competition. Disadvantages: fees is getting shared, psychological problem, superiority complex, there will be problems for coordination, common concern will get neglected, and uncertainty about the liability. There are a few special considerations regarding joint audit. The engagement partner and the engagement team must be involved in the process of planning. In joint audit, they should establish the overall audit strategy. Even before the commencement, they should have an audit plan. They should identify the risk of material misstatement for the overall audit strategy. Document the nature, extent and timing for all the common audit areas and also for the specific audit areas. Engagement letter, there will be only one engagement letter, and management representation letter, there will be only one MRL as well. And there should be something called as work allocation document, where each auditor will sign to understand their responsibilities as part of joint audit. Now, wow notes of SA 315. Before even we went inside the standard, we saw basics before SA 315. So in that we started off with what is audit risk. Audit risk is the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. That means the financial statements are wrong and the auditor gives an inappropriate audit evidence saying it is correct. Only that will be an audit risk, and not ulta also. I told you, I gave reasons as to why it is not ulta. Why? Because there is nobody relying on that signature, giving the loan or investing in the shares or anything. What is the meaning of material misstatement? The definition of material misstatement, we saw that it was the difference between the amount classification, presentation and disclosure of a reported financial statement item and the amount classification, presentation and disclosure required for items to be as per AFRF. I hope you remember example of the amount I said, example of the classification I said, example for presentation I said, and the example for the disclosure I said. Basically, if it is not as per accounting standards AFRF, that means there is a material misstatement. Now, risk of material misstatement can be for the financial statement as a whole, or it can be for account balance, class of transaction or disclosure, each of these levels. And the components of risk of material misstatement is inherent risk and control risk. Components of audit risk is risk of material misstatement and detection risk. Now, detection risk is again split into sampling and non-sampling risk. Sampling risk means what? That the sample is not representative of the population. Non-sampling risk means what? Inappropriate audit procedures. Then we went to SA 315, identification and assessing the risk of material misstatement through understanding the entity and its environment. What is the objective of this standard? Again, the same as the name, to identify and assess the risk of material misstatement at two levels, at the financial statement level and also at the account balance, class of transaction and disclosure level. For what? For designing and performing the further audit procedure. Now, apart from this, they are going to identify and assess the risk of material misstatement. How are they going to identify and assess the risk of material misstatement? The auditor will identify the risk, assess the risk, relate the identified risk and consider the likelihood, which is nothing but the probability of the misstatement happening. Next, we went to what is the meaning of risk assessment procedures. This is also an audit procedure. Yes, we saw IO, that those are the audit procedures for risk assessment procedures. Audit procedures performed for what? To obtain an understanding of the entity and its environment. What are the audit procedures that is going to be performed for the risk assessment procedures? IO, analytical procedures, inspection, inquiry and observation. Next, we saw entity and its environment. How will the auditor get an understanding? He will see what is the industry, regulatory framework, what is the AFRF, what is the nature of the entity, what is the accounting policy that they are following, is there any change? If there is any change, what is the reason for the change, what are the objectives and strategies of a business risk, and what is the financial performance. When they see the previous year's report, they understand the financial performance and all of those things. What is the meaning of internal control? Internal control basically gives a reasonable assurance. Internal control is the control which is designed, implemented and maintained by the management to achieve the entity's objectives for reliability of financial reporting, effectiveness and efficiency of its operations, safeguarding of assets and applicable laws and regulations. Next came what is the objectives of internal control. For authorization, whether it is recorded correctly with respect to proper amount, proper account and proper period. Assets have been properly safeguarded, assets have been physically verified in reasonable intervals. This is what objectives of internal control. Next we went to what are the benefits. Why should I look at the internal control? Benefits is for identifying the misstatement, identifying the risk of material misstatement, and based on this I am going to design nature, extent and timing of further audit procedures. If there are advantages, definitely there will be disadvantages as well. Next we went to limitations. What are the limitations? This is only giving a reasonable assurance. It is designed, implemented and maintained by the management. So humans are involved. So their judgment is involved. Judgment by the management. Collusion between people. Lack of understanding the purpose. And if for small entities, it is difficult to implement. I hope you are remembering the examples. Lack of understanding purpose and all. PVR example I told you. Then we went to study of various aspects. It is split into 4. The first one is talking about general nature and characteristics. Under that we saw what is the purpose of internal control. What is the purpose? The same in the definition which is given as to achieve the entity's objectives. The same 4 objectives only are the purpose. Reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets and applicable laws and regulations. Controls which are relevant to the audit. What is the mnemonic? SLM, NCC and DRS. SLM, NCC, DRS is basically going to tell me what are the internal controls which is relevant for my audit, because every company will have thousands of internal control, maybe even lakhs of internal control. What is S? Size of the entity. L, legal and regulatory framework. M, materiality, nature of the business, circumstances of the component of internal control, complexity and nature of information systems, diversity and complexity, related risk and specific control which is going to prevent, detect and correct the material misstatement. Now when I see all of these things, the auditor gets an understanding as to the controls which are relevant to the audit. The next comes what is the nature, extent of understanding of internal controls. What is the nature, extent? How deep I have to go to understand the internal controls. Whether it is capable of preventing, detecting and correcting a misstatement. Then risk assessment procedure. Under risk assessment procedure, we already know it is IO. Then understanding the internal control does not mean that the internal controls are operating effectively. Next comes component of internal control. What is a mnemonic? Crime, control activity, risk assessment procedure, information system, monitoring activities and control environment. Then under control environment we saw another mnemonic. Where is that? Elements of control environment, that is SHAPE PC. What is SHAPE PC? S stands for organizational structure, HR policies and procedures, assignment of authority and responsibility, philosophy of the management, ethical values and participation by those charged with governance and commitment to competence. I hope you remember all the examples we saw. For SHAPE PC, I told my story and all of those things. Yes or no? Ethics, which company, how it was, how was the culture, honesty, ethical values. I hope now you remember. This is control environment. Somewhere else also we saw mnemonics. Where else did we see? For control activity also we saw. Control activity, what is the mnemonic? ISPA. ISPA means the examples of control activity. What are the examples? Information processing, segregation of duties, physical control, performance review and authorizations, which is ISPA. For risk assessment procedures also it is ISPA without double P. It is only single P. What is that? Identifying the business risk. S is significance of the risk. P is probability, that is the likelihood of the occurrence, and last is actions that has to be taken. With that, elements are done. Then comes methods for evaluating. What are the methods for evaluating? Narrative record, checklist, internal control questionnaire and flowchart. Which is the most commonly used? The questionnaire is the most commonly used. Which takes least time? Checklist takes least time because it is only tick, tick, tick. Evaluation of internal control. This enables the auditor to know all these points. Whether internal control system is adequate, if there is any error or fraud, if any internal auditor is effective, if there are administrative controls, how are the recording of transactions, which is the input, what is the output, the reports which come, the records which come, and then extent and depth. Audit techniques. If there are any weak areas, the auditor can even give suggestions for improvement. Then comes testing of internal control. It is to obtain audit evidence regarding the efficiency of the design of the internal control and also of the operation of the internal control. I hope you are all mapping the examples in your head, what I told for design and operation. Now, the audit procedures here is IIOTR. IIOTR is inspection, inquiry, observation. Testing is already here. So testing for T, and R, re-performance and not recalculation, because we are in internal control. There is nothing to calculate here. Next we went to internal control and IT environment. Under that, what did we see? Where can we use the IT? What are the benefits of IT? What are the IT risks? I hope you understood what is inaccurate processing of data and processing the inaccurate data. Here, data is inaccurate. Here, processing is inaccurate. Apart from that, what are the other risks? Unauthorized access, unauthorized change in master file, unauthorized change in the system or program, loss of data, loss of access. If there is lot of suitability, then what is suitability for judgment and discretion? If there is lot of judgment, then what is good? Manual or automated? If judgment is involved, manual is automated. Reliability, if it is more reliable you want, then automated is suitable. This is essay 315. Today, are you feeling better when we went through everything? Yes, you're feeling better. You're able to map everything in your head. Essay 450 talks about what? Evaluation of misstatement identified during the audit. What is the objective of the standard? If the effect of identified misstatement or uncorrected misstatement on the financial statement. You will be accumulating all the misstatements, and for accumulation purposes, you will not take something which is trivial. Trivial means if it is too small, you will leave it. Don't waste your time and energy on that. Few examples we saw: inaccuracy in processing the data, and an omission of an amount or disclosure, and any revenue item which has been wrongly capitalized. Example for that: any revenue item wrongly capitalized. Repairs and maintenance, it has to be shown as profit and loss expense, but what have they done? Added to the asset itself. Now, as the audit progresses, there should be a revision of the audit strategy and the audit plan. To identify misstatement indicates existence of further misstatements or for accumulation of misstatement. Now you will be communicating to the management or TCWG if you find any misstatement, and this communication has to be done at a timely basis. The auditor will tell the management saying, listen, I have examined your account balance, class of transaction disclosure, and this is my understanding of the cause of the misstatement. If the management corrects, then auditor will be doing alternate audit procedures and check if the misstatements still remain. If the management says, hey, get out, refuses to correct, then ask for reasons, obtain the reasons from the management and evaluate whether the financial statements are free from material misstatement. Is there a standard reference given here? SA 450 does not give a standard reference, but evaluate financial statements free from material misstatement means you are saying if there is a material misstatement still exists, and if it exists, automatically you will be going for SA 705 modifications. Then here written representation SA 580 reference is there, where summary of all the uncorrected misstatements that is immaterial, you have to get a representation from the management. They will be writing that love letter. Now you also have to write that love letter, that is called as documentation. SA not 320, 230 audit documentation, amount below which it is not material, all misstatements accumulated and whether it has been corrected. Then auditor's conclusion on the uncorrected misstatements are material or immaterial and the basis for the conclusion. If there is any uncorrected misstatements, then the auditor has to see the effect of the uncorrected misstatements, size and nature of uncorrected misstatements, and the effect of ABCD and financial statements, the effect of prior period uncorrected misstatement in the past year. If there was any uncorrected misstatement, then we will have to see if there is any effect on the current year's account balance, class of transaction and disclosure. With this, SA 450 wow notes is. I hope you remember what is SA 530, audit sampling. What is the meaning of sampling? Application of audit procedures to less than 100% of the items in the population such that all the sampling units have equal chance of getting selected. Objectives, you are going to get a reasonable basis to draw a conclusion about what? The population. Population is one of characteristics of population, CAR. Completeness, appropriateness and reliability. Key terms you saw: what is population, what is sample design, what is sample size and what is sample unit. Methods: statistical, non-statistical. Under statistical, random, systematic, value-weighted. Under random, simple and stratified. Under non-statistical, haphazard and block. Sampling process, if it is a test of control, you will be saying it's the deviation. If it is a test of detail, then you will call that as a misstatement in account balance, class of transaction and disclosure. Difference between statistical and non-statistical sampling. Will you waste time studying this part? Where will you study? The basis is what you will study. Where is it made? Probability. Statistical sampling. Where is a lot of bias? Non-statistical sampling. Which one is more accurate? Statistical sampling. Which one is based on scientific evaluation? Statistical sampling. If the population is large, which one should you use? Statistical sampling. Which one is more representative of the population? Statistical sampling. So you spend some time on the basis part and don't waste your time mugging up this unnecessarily. You should automatically be telling this in a logical sense. Next is for making a sampling plan, what are the factors that you have to consider? The size of the organization, the internal controls, what is your tolerable error, desired confidence for the users of the financial statements, adequacy and reliability of the books. Nature influencing the sample size of test of controls, test of details. Again, don't waste your time which one is high, which one is low, where you will be spending time on the basis only. If you want to give more assurance, then you have to increase your sample size. If there are lots of controls, then you will be increasing your sample size. If the expected rate of deviation is high, you will be increasing your sample size. If the tolerable risk is high, you can tolerate even if there is a misstatement. That means it is not that material. So you will be reducing the sample size. If there is any change in sampling units, no change. The same thing here, extra is risk of material misstatement. If you know that there is a risk, then you will be increasing the sample size. If there are other substantive procedures which are being used, then you will be reducing the sample size, because not by way of sampling, by other ways you have already obtained sufficient appropriate audit evidence. So here you can be little lenient and you can reduce the sample size. Sampling design, if it is a test of control, you will say expected rate of deviation. If it is a test of detail, you will say rate of misstatement. Projection of misstatement. For test of control, will you project it to the entire population? No, please do not project because it is with internal control. Test of details, you will be extrapolating, but you will not do that for anomaly. Anomaly means one-off incident, but anomaly keeps on continuing, then you have to project it. If it does not continue, you cannot project it. I hope you are remembering the examples. If the audit procedures, you can apply the audit procedures, then you will be obtaining the sufficient appropriate audit evidence, and based on that you will be giving your opinion. But if you cannot apply your audit procedure, what will you do? On the replacement item, you will do the audit procedures. Now, in that replacement item, if you are able to perform, then you will get sufficient appropriate audit evidence. If you are not able to perform alternate audit procedures. In that alternate audit procedures, if you are able to get sufficient appropriate audit evidence, no problem. If you cannot perform, then you see whether a test of control or a test of details. If it is a test of control, then you will conclude that there is a deviation. If it is a test of detail, you will be conclude that there is a mistake. Then comes evaluation of sampling risk. For test of control, if there is high deviation, then that shows that the risk of material misstatement will be high, the fixed asset example. For a test of details, if there is high misstatement, that means account balance and class of transactions have been materially misstated. If the projected plus anomaly is more than tolerable, what you can tolerate, then do not use sampling. If the projected is more than, it's not anomaly, it is more than what is expected. If the projected is more than what is expected, then it is an unacceptable sampling risk. Now comes to sampling risk. Now for test of control, risk of over-reliance, under-reliance. For test of details, risk of incorrect acceptance and incorrect rejection. For test of control, over-reliance means internal control is operating a certain way, but you are relying on it too much. That means what? You are unnecessarily trusting that Elumala example I gave you. Now that means it affects the effectiveness. If you are under relying, that means internal control is good only, but we all have trust issues. So you are not believing the internal control. So what will you do? You will do more and more audit procedures, waste your time. So it affects the efficiency. On the other hand, risk of incorrect acceptance. That means the financial statements are materially misstated and the auditor is saying that everything is correct. Is anybody going to rely on this? This is not an audit risk. But on the other hand, incorrect acceptance means if the financial statements are materially misstated and the audit report is saying everything is correct, then people are going to rely on this. Because auditor has said everything is correct, the bankers will be giving the loan, the shareholders will be investing their money. So this is a audit risk. On the other hand, if you see incorrect rejection, that means financial statements are correct only, but the auditor is saying it is wrong. In this case, nobody will rely on this and give any money. So this is not a audit risk. Clear, guys? This is essay 530, audit sampling. Let's quickly revise bank audit. We started off with types of banks. What are the types? Commercial bank, cooperative bank, development bank, regional rural bank, payments bank and small finance bank. What are the functions of the bank? To accept the deposits and to grant the loans. Then there was a regulatory framework. There are 9 acts which is given here. Then audit report. If it is a nationalized bank, the audit report has to be given to central government. Did we read this? No, the audit report has to have a true and fair view. The transactions must be within the powers of the bank. The returns which is given by the branches should be adequate and any other matter must be disclosed in the audit report. Next, appointment of auditor. If it is a banking company, then shareholders in the AGM will be doing it. If it's a nationalized bank, the bank itself through its board of directors will be doing it. But for both, you require RBI approval. If it's a regional rural bank, then the bank itself plus approval from central government is required. Now remuneration, who will be talking? For banking company, section 142 of the Companies Act. If it's a nationalized bank and SBI, then RBI in consultation with the central government, and for banking company it is the company in the general meeting. Types of audit report. We saw many types of audit report. Yes, internal control over financial reporting, long format audit report, it has to be given on 30th June. SLR requirements percentage of NDTL which has to be kept by the bank itself. Treasury operations as per RBI, income recognition, asset classification and provisions as per RBI. Any serious irregularity, Ghosh committee, Jilani committee. Ghosh committee is for fraud and Jilani committee is for risk assessment and internal control. And if there is any adverse credit deposit ratio in the rural areas, are you able to recollect all the points for types of audit reports? Next, what are the powers of the auditor? He has the same powers of the Companies Act I told you. Inspecting any books of accounts, calling for information, calling for additional information, and to make an inquiry under section 73 subsection 2. For conducting an audit, he has to first do the initial consideration. Now under initial consideration, what and all are there? Declaration of indebtedness. There is no internal assignments in the bank. Planning, communication, previous auditor, terms of audit engagement, initial engagement, understanding the banking environment, assessing the engagement risk, and establishing the engagement team. This is with respect to initial consideration. Apart from this, understanding the bank and its environment, risk management process, SA 300, overall audit strategy, audit planning memorandum, SA 570, specific risk, outsourcing risk, Basel 3 framework, identifying and assessing the risk of material misstatement, understanding the banking accounting process, engagement team discussion, developing an audit plan, SA 320, fraud as per PMLA, response to the assessed risk stress testing, and other reports. Under other reports, I told you that there are two reports, Financial Stability Board and Basel Committee on Banking Supervision. Next we went to advances. Advances should come in the asset side of balance sheet. There are two types of advances. One is funded loan and non-funded loan. This was not there, correct? What is the meaning of funded loan? Funded loan is basically giving us money. Non-funded loan is giving anything other than money. For example, letter of credit, letter of undertaking, bank guarantees. All of those things are non-funded loan where there is no transfer of funds. Classification of advances can be done sector wise, security wise, and prudential norm wise. Sector wise, priority sector, non-priority sector. Security wise, secured, unsecured. Prudential norm wise, standard and non-performing asset. For non-performing asset, we have a table where what is it saying? If it is a standard or regular, then nothing is there. If it's not yet fallen due, once it falls due, it becomes a SMA. If 0 to 30 days, it is SMA 0. 31 to 60 days, it is SMA 1. If it is 61 to 90 days, it is SMA 2. Now after SMA 2, they become a NPA because the due is more than 90 days. If they are NPA for 12-month period, what will you call them? Substandard asset. Substandard asset now provision will be 15% for the secured portion. For the unsecured portion, always it is 100% only. Now, if they are substandard for a 12-month period, then they fall into the doubtful category. If they are doubtful for a 12-month period, then you will call them as D1. What is the provisioning for D1? 25% for the secured portion, and for the unsecured portion it is 100%. Now they are doubtful for a period of 1 to 3 years, then they will be D2. If they are D2 category, then what is the provisioning? 40% for the secured portion, and for the unsecured portion it is always 100%. Now D3 means it is more than 3 years in the doubtful category. It is more than 3 years, then it will be D3. 100% for the secured and 100% for the unsecured. Loss asset means either an internal auditor or a statutory auditor or the RBI classifies it as a loss asset, then 100% you will not worry about whether it is secured or unsecured. Is that clear? This is with prudential norms. Now when you spoke about security wise, what is mortgage, what is pledge, what is hypothecation, assignment, lien, and set off. Mortgage is only for immovable property. Example, land, building, all of those things. Pledge, it is only for gold, so it is a movable property. Hypothecation for any other movable property like car. Assignment, I am assigning it to somebody else for their use. So one person is called as assigner and the person who is enjoying it is called as assignee. Lien, lien means what? It can be anything, either a movable or an immovable property where there is a creation of charge specifically for creditor. Set off. Set off means the right of a creditor to adjust a debit balance against a credit balance, doesn't matter what kind of advance it is. Next, we have to see, yes, this one is important. If there is a erosion in the value of security. Now, security you have kept as a building. 3 crores worth of building, but the building has become very old. It is right now not even 1.5 crores. If it is less than 50%, then you will classify it as doubtful. If that security is realizable less than 10%, it is 3 crores, but not even 30 lakhs you'll get. If it is less than 10%, then you'll put it under loss category. Very, very important. Erosion in the value of security. Clear, guys? Now, this one also is not there. Agricultural advances. For this, you need to know about long duration crops and short duration crops. Long duration crop means one season is more than 1 year. Short duration crop means 2 crop seasons will be there in a 1 year period, and that time you will have to check. Now, advances under consortium. Consortium means what? I gave you an example where many banks will come together and they will give the loan to share the risk basically. Advancing loans by 2 or more banks jointly. Bank with a higher share will lead the consortium. Participating banks need to arrange to get the share of requiry from the lead bank only. Now the lead bank will take the responsibility for everything. DP allocation, drawing power allocation also is the responsibility of the lead bank only. Lead bank is the person who is not starting the whole loan process. Lead bank is a person who is having the majority share which has been given as the loan. Is that clear? Evidences regarding advances. Amount as given as advances should be only as per balance sheet date. Check the collateral whether there is sufficient margin on the collateral. Valuation must be proper. Any provision which has to be done should be done as per the RBI norms. Any advance is actually, it is the amount which is due to the bank, and no unrecorded advances should be there, and advances should be appropriately disclosed, classified and described as per accounting standards. Next, audit procedure. This also I told you, there has to be a loan document, security must be there, RBI norms, analytical procedure and reviewing the operations. Now what is the meaning of drawing power? It is a concept of cash credit facility, that is the limit up to which a company can withdraw from the working capital limit which has been sanctioned. Sanction limit is the total exposure that a bank can take for a particular client. It can be cash credit, it can be OD or any other non-funded exposures also. Non-funded exposures means the letter of undertaking, bank guarantee, all of those things. Drawing power is the amount calculated where primary security minus the margin you will have to see. Drawing power is based on stock statement for less than 3-month period. If the fund exposure is more than 5 crores, then stock audit has to be done. Next, audit of revenue items or income. Income must be, there should be reasonable assurance that it is recorded in the correct period, correct amount, and no unrecorded income should be there. If it is not material, then don't go for qualifications. NPA only on realization. Bills purchased outstanding as on 31st March should be apportioned between both the years. And bills for, where is that rediscounting point? Here, rediscounting, if it is there, please don't do the netting process. And fees for renegotiation, reschedule, all of that should be only on accrual basis. RBI norms, what is it saying? More than 1% of total income or more than 1% of profit before tax, then it should be only on accrual basis. Interest on advance, take into income account on due date if the margin is available. And for bills for collection, see who is the crediting of the party. Now, reversal of income, I told you, right? One point you already know. All the other points we'll see now. Now, advance including bills purchased and discounted if they have shown as NPA, then later stage, then the money is not recovered, then you will have to reverse the income. Fees, commission accrued, cease to accrue in the current period, then reversal with respect to past period if it's still uncollected. On accrual basis, if you've shown the fees, on accrual basis, if you've shown the commission which you have actually earned, but when the due date comes, you are not actually earning the fees and commission. In that case, you will have to reverse the income. If there is a circumstance where you have recognized an income, now when you know that it is a wrong recognition, now you please reverse that income. Large debits, interest income account not explained. For example, there are debits means what? Debits means, for bank audit we are in large debits interest income account which is not explained. That means what? Interest income. Interest income if it is there and if it is a large debit but you don't know how it is happening, now you know that nothing is happening, so you will be going for reversal of income. Communication from the borrower is different in the interest charge. You are saying that he has to give me an interest of 10 lakhs, but the borrower is saying it's not 10 lakhs, it's only 2 lakhs. If you think that he is going to give you 10 lakhs, you would have accrued your income for a 10 lakh period, but he will pay only 2 lakhs, so that remaining 8 lakhs you will have to reverse the income. Least asset component of finance income accrued and credited to income account even before asset became an NPA. What is the meaning of this? What is the meaning of this? What is the meaning of finance income? When you give as a lease, they will be giving a rent, correct? If it's a finance lease, you will call that as a finance income. Now that finance income you have already shown as accrued in your profit and loss account, but later that asset itself has become non-performing asset. In that case also you will have to reverse the income. Now many a times they have asked, what are the cases you will be doing a reversal of income for bank audit? Then you will have to write all the 4 or 5 points which is here. What is the meaning of takeout finance? A loan that is procured later to replace an initial loan. Yesterday I told you, I will first get a loan from one person, then I will take another loan to repay this loan. Then I'll take another loan to repay that loan. Basically, I am procuring a loan at a later stage to replace the initial loan that I've taken. That is called as takeout finance. Objective of takeout finance is to expand the sources of finance, is to address the group exposure and availability of longer tenure debt finance. Why longer tenure? Because the first loan which I am taking will fall due in 2 or 3 years. Now I want this for 10-year period. So again I will take out another loan. Now another 3 years I am having. Then after 3 years again I'll take out another loan. Another 3 years I am having. Like that I'll keep going on. That is called as takeout loan. Now the last part, RBI functions is given. Now who is RBI? The bankers' bank is called the RBI. Now all the banks who are calling themselves as bank, whether they are regional rural banks, whether they are payments bank, whatever it is, they have to get a license from the RBI. Now RBI has specific power saying they can inspect any books of accounts of any bank. Some functions are there of RBI. This is not with respect to banks. It is just the functions of general RBI. The first function is the money which we are having, they would only print the money and they will issue it as currency. Issuance of currency is the first function of RBI. The second one is regulation of currency issue. That means how much money should be circulated, the RBI will tell. How will they know? If they want to reduce the circulation, what will they do? If they want to increase the circulation, what will they do? They have the interest rate, correct? So if they reduce the interest rate, then circulation will increase. If they increase the interest rate, everyone will put it in the deposits. So circulation will reduce. So the money supply which is there in the economy, who is taking care of that? RBI only is taking care of that. It is the banker for both central government and state government, and is also the banker for the bank. It takes care whether all the banks are following all the regulatory activities. The form and contents of the financial statement is given in section 29 subsection 2 and subsection 1 of the Banking Regulation Act. The disclosures which has to be made same as Companies Act section number 133. Now form and content of the financial statements should be, the balance sheet should be in Form A of the Schedule 3 of the Banking Regulation Act, and P&L should be Form B of the Schedule 3 of the Banking Regulation Act, and all of this is under third schedule. Do not forget, same way for company. Qualification and disqualification same as Companies Act. Here you saw a few new points. Yes, that agricultural was new, takeout finance was new, reversal of income was new. What else was new here? Consortium, the text was new, I explained, but text was new. Erosion in the value of security, yes, that was new. There were a few new points. I hope you have made note of them. Clear, guys? This is bank audit. With essay 320. 320, a quick revision. Just now we saw, it should be fresh in your memory. Let's quickly finish it off. Hardly 5 minutes it's going to take. Just trust me now. Now we started off with auditor's responsibility. It is a concept of materiality which is applied in planning and performing the audit, and in evaluating the effect of identified misstatement and uncorrected misstatements, and in forming an opinion. Planning and audit, when he is planning, auditor makes judgment about the size and nature of the misstatement. Now this judgment is going to provide the basis for nature, extent, timing of risk assessment procedure, nature, extent, timing of further audit procedures, and identifying and assessing the risk of material misstatement, and also for benchmark. There is a statutory requirement, income or expenditure more than 1% of, all of you, are you awake? Alive? Yes or no? Alive? Awake? So please tell the statutory requirement where an income or expenditure is more than of the, or rupees, whichever is. There is one more statutory requirement, more than 5% of shareholding. If it is there, then you have to mention the number of shares that he is holding along with the name of the person. It is reasonable for the auditor to assume that the users of the financial statements have knowledge of the business, economic activities or the accounting process, that he understands that the financial statements are presented only as per materiality, and recognizes uncertainties in estimates and judgments, and he can make reasonable economic decisions. What is the meaning of performance materiality? It is a level of materiality below the level of actual materiality. If ABCD is less than materiality, but it still affects the decision of the users of the financial statements, then the auditor will be determining the materiality for ABCD. Benchmark means what? A percentage is applied on the benchmark to determine the level of materiality. You will be identifying the benchmark by seeing whether it is an element of financial statement, what is that element, whether it is a P&L item, whether it is expense, whether it is a asset side of the balance sheet, and items which requires attention. What is the nature of the entity? What is the relative volatility? All of these things. What is the question for this? How are you going to identify the benchmark? Factors which affect the identification of the benchmark. For the purpose of benchmark, the financial data includes past, present, future, and any adjustments for the same period, prior period financial results, period to date financial results, and budgets or forecasts for the current period. Now what and all will you document? You will be documenting for the financial statements as a whole. You will be documenting materiality for ABCD, you will be documenting performance materiality and any revision from A to C. That means all these 3 points, if there is any changes, that also you will be documenting. Entire materiality, single side, it is over. Let's start off with the most important standard, SA 300, planning and audit of financial statements. Now for audit planning, what do you have to do? It is the need to consider prior to the auditor's identification and assessment of risk of material misstatement. What do you have to see in that? Analytical procedures, risk assessment procedures, legal and regulatory requirements, materiality, if there is any expert work which is required, and other risk assessment procedures. Now you have to see what is this risk assessment procedure. Planning is not a separate or distinct phase, but is a continual and a repetitive process. When does it begin? When does it end? It begins with the completion of the previous audit till it goes to the current audit completion. Elements of planning process: preliminary engagement activities and planning activities. The preliminary engagement activities has only 3 points: continuance of the client, ethical requirement, and understanding of the terms of the engagement. Under planning activities, you have 2 parts: overall audit strategy and developing an audit plan. Overall audit strategy, under that, what is the meaning of overall audit strategy? It sets the scope, timing and direction of audit and guides for the development of audit plan. Under development of audit plan, only 3 points: nature, extent and timing of risk assessment procedure, nature, extent and timing of further audit procedures, and any other audit procedures if it is there. What are the benefits of planning? Attention to the important areas you will be able to give, resolve the problems on a timely basis, selection of engagement team, you can assign the work easily, review of the work you can do, and any experts if it is there you can see. For this, the auditor shall identify the scope of audit, ascertain the reporting objectives, consider results of preliminary engagement activity, and considers which are factors directly affecting the teamwork. What is the documentation that you will have to do? You will have to document the overall audit strategy, document the audit plan, then any changes if it is there in the overall audit strategy or the audit plan, along with reasons. What is the meaning of audit program? It is a detailed plan giving a series of verification procedures that an assistant has to follow. There are few advantages, there are few disadvantages. What are the advantages? Clear set of instructions. For big audits, major audits, it is important. Selection of assistant becomes easier. If you only have a mental plan, then it is difficult. It has to be in a documentary format. The signature denotes the acceptance. That means you know exactly whom to ask in case something goes wrong. Whether controls are progressing or not, you will know when you look at the audit procedures. It becomes a guide for the next year. Disadvantages: it is mechanical in nature, it is rigid and inflexible. Inefficient assistants may take shelter against the audit program. That means they will not think, they'll just follow whatever is given to them. It kills the initiative of enterprising assistance. One audit program can I use for all types of business? No, one audit program not practicable for all types of business. Assistant needs to have an open mind, and periodic review of the audit program must be there. Constructing, when you are constructing, you need to take care of a few things, and is designed to provide the audit evidence. Now down, if you see, they might say in your exam, construct an audit program. You need to know what are the contents which are there in the audit program. Clear? Name of the concern, you will start Daimler India Commercial Vehicles Private Limited. Like that you will put the name of the concern. For what financial year are you doing? 2025 to 2026. Like that one financial year you will be writing. Prepared by Sneha. Reviewed by Tiruchitrambalam. Approved by me. Like this, I am going to give the names of the people who have prepared, reviewed, approved in the audit program itself. And then comes what is the nature of procedure, what is the extent of check, what is the basis of sample, and who has done each work. They will be signing here. This contents they can ask. You need to remember how you will start and all the contents which is there. In case they ask you construct an audit program, this is the way to do it. Is that clear? Yes, this is essay. 300 planning and audit of financial statement comes to an end. Warm notes of automated environments. We started off with what is an automated environment. It is a business environment which has the, if it's not coming, I don't know. Which has the process, operations and accounting decisions, and everything is taken care of by the IT computers. Now all of you please take your, do you have the warm notes with you? You have it ready? Come back. We'll see what are the features of automated environment. Large volume of data. It is very fast and accurate, and human errors is very less, and connectivity is also good. Understanding and documenting the audit evidence. What and all should we document? All of you here. What and all should you document? The information system which is being used, what is the purpose, what is the location, whether it is local or whether it is global, what is the architecture, what is the version, interface which is used, in-house or packaged, outsourced activities, and key persons, whether somebody is a CISO or CIO, that also has to be documented. What are the risks of automated environment? Inaccurate processing of data or processing the inaccurate data, unauthorized access, changes to program or changes to the master file, changes to the system, and loss of data. What are the impact of IT related risk? Only 3 points. Substantive checking, controls, and reporting. What are the types of controls? General IT controls, application control, and IT dependent control. Under general IT controls, what do we have? Data center and network operations, and program changes, access security, application system acquisition, development, and maintenance. Under application control, whether it is automated control or manual control. It is both automated and manual control, and it talks about mandatory data field, user limit, sequence number check. He came, he did some magic and it came off. How? What you did? Okay, thank you. Application control, automated and manual control, mandatory data field, sequence number check, user limit, all of these are examples we saw for application control, which is both automatic and manual control. IT dependent control, it is manual controls. Then we went to suitability, for where what is suitable. Manual control is suitable for non-recurring transactions, any change in circumstances if it is there, and monitoring of the automatic controls you have to do. Again, don't do with automated itself, come to manual. Automated controls, high volume and for recurring transactions it is useful. Testing methods, what kind of audit procedures you have to do? You definitely have to start off with inquiry. And what are the audit procedures that you can do for internal control? Recalculation you cannot do, reperformance you can do, inspection you can do, observations you can do, analytical procedures you cannot do. So inquiry, they're saying, is the most efficient, but it provides the least audit evidence because the client will not give you the desired information. What is reperformance? You doing the same activity again is reperformance. This is most effective, but it is time consuming, so it is not as efficient. So what is the best? The best is inquiry and inspection. Why not observation? Observation is only at a particular point in time. That's why not observation. Audit approach. How are you going to approach the audit? You'll be seeing what is the risk assessment, whether how to understand and evaluate, test for the operating effectiveness of the controls, and the reporting. Next we went to what is the meaning of data analysis. It is a combination of process, tools, and techniques used to tap vast amount of data to obtain meaningful information. That is called as data analytics. Where and all can you use? How is it helpful? It can increase your profit itself. It can increase customer service. It can increase competitive advantage, increase the operating effectiveness. And tools and tech for audit is called as CAT, computer assisted audit technique. What is digital audit? For conducting the audit, you using data analytics or artificial intelligence or any other technology to understand the business. What is IFC? It is a policy and procedure for reliability of financial reporting, effectiveness and efficiency of operation, compliance with applicable laws and regulations, safeguarding of assets, and new one, prevention and detection of fraud. Next, what should you document here? Any discussions with the engagement team members, understanding of the entity and its environment, whether the risk of material misstatement is as per the financial statement level or for each of the assertion level, and risks identified and related controls. Next we went to report audit findings. To whom should we report? To the stakeholders and TCWG and board of directors. If there is any weakness in the internal control, if there is any impact of that weakness, and efficiency of the significant deficiency of the internal control has to be told to the management in IC memo or management letter. Is that clear, guys? This is automated environment. It's easy if you see the wow notes, correct? Yes, now after we fully studied and then we came to the wow notes, it's very, very easy to recollect all the points. Coming to the warm notes of essay 330, small it is. Can you see it? Not even half a page. Very, very small. Now here first we saw auditor's responses to assessed risk. Response to essay 315 we saw. Then they designed the responses. Based on designing of responses, seeing the further audit procedures. In further audit procedures, we saw two kinds of risk, inherent risk and control risk. What is the probability of the misstatement and what are the controls in place. Then we came to test of control and substantive procedures. Under test of controls, that mini mind mapping had what is the extent, what are the design and performing the test of controls, and the auditor shall, using audit evidence obtained in the previous audit, specific inquiries by the auditor when there is a deviation. Now quickly let's go through that. What is the extent, what and all I have to see? I have to see the frequency of the internal control. I have to see the time in which the internal control is done. What if there is an expected rate of deviation, what is the relevance and reliability, and if there is any other control, then whether I can get audit evidence from that other control. Designing and performing test of control, the auditor shall compulsorily do what? Inquiry, but he has to combine that with some other audit procedures. He can also see other indirect controls. Examples I have given here. Salesperson only must have access to the point of sale, but indirect control is there should be a strong password for the login. Same example I have told you, so that when you look at this before the exam, you will be like, thank you, ma'am. Clear? Inquiry plus what is good? Inspection plus reperformance and not observation, because observation is at a particular point in time only. Now the timing can be either at a particular time or at a throughout a period. Using audit evidence obtained in the previous audits. Can I use that? Yes, you can. But you please see what is the component of that internal control. What is the control? Whether it is automated or a manual control. What is the effect of general IT controls? If there is a change in the control or change in the personnel, then what is the risk and what is the extent of reliance you will have to see. Then specific inquiry by auditor. When there is a deviation, you ask him what are your reasons, reassess the reliance on that control and whether the management has considered doing substantive procedures. Now we are here. Substantive procedures are designed to detect the material misstatement at each of the assertion levels. So test of details of ABCD has vouching. For this we had example of purchase transaction. Test of balances verification, we had a example of fixed asset. Please write here. Then substantive analytical procedures. Analytical procedures plus test of details, that is only the best. Is that clear? For essay 330, we are done with warm notes as well. Just 3.5 minutes we are done with the standard. You see how fast we are able to complete the standard because it is fresh in your memory.